All right, this is an example of a bank reconciliation. So here what I want to do is prepare a bank reconciliation and record entries after the bank reconciliation has been completed into the company's books. So you can see here at the very bottom is oh, nope, not trying to move. Okay, I got to move this back up. There we go. Number one, you see required here, prepare the bank reconciliation for this company as of July 31st. And then for number two, I'm going to prepare the journal entries necessary that needs to be made in the company's books to bring the book balance to match the bank balance. All right. So as we can see here, this is branch company's book balance here of cash that we're concerned about, and we have to do the reconciliation to the bank statement cash balance as of July 31st. So letter A, on July 31st, the company's cash account has a $27,497 debit balance. So let me just underline that. That lets me know that this is the branch company's book balance, but it has a July bank statement balance here of $27,233. So it is normal for the book and bank balance to be different. So that's normal. So over here, I'm going to set up this reconciliation. So branch company, and this is going to be this is going to be a bank bank reconciliation, and it's going to be for the month of July. So July 31st. On the left side, I'm going to put on here, there we go, bank balance. On the right side over here, I'm going to put over here book balance. Oh, that's too far. Hey, that's fine. I'll put on here book balance. Okay, so what are we going to start off with? So it tells us that the bank balance here is $27,233. So that's what we're going to start off with. And then on the book side, the cash account balance is $27,497. So that's the book balance. So $27,497. Okay, we're done with letter A. So I'm going to go ahead and put a check mark on letter A because we're done there. Letter B, check number 3031 for $14.82. Check number 3065 for $3.82. Check number 3069 for $22.81 are outstanding checks as of July 31st. So this here is telling us that these checks are outstanding. This means that these checks are already included in this book balance here of $27,497, but it's not included in the bank balance of $27,233 yet. So for reconciliation purposes, we need to go ahead and include these checks, these outstanding checks, as a reduction on the bank side. So I'm going to, bring it down here. I'm going to put on here outstanding checks. And this is going to be for, check number 3031, check number 3065, and then check number 3069. And these are all going to be a reduction. So check 3031 was $14.82. Check number 3065 is $3.82. Check number 3069 is $2,281. Okay. So the reason why these checks are outstanding is because they have not been cleared or cashed out yet by the individuals or businesses that receive the checks. So it's still floating out there, still outstanding, meaning that, again, these are checks that are already written, but they haven't been cashed or cleared out yet from the bank. Now, on the company side, once a check is written, it's automatically assumed that, hey, the cash is already gone, because eventually it will leave. It will be gone once the checks are cashed or cleared from the bank. So it's already included as a reduction from the book balance. So we don't have to do anything on the book side, but on the bank side, these are checks that hasn't cleared the bank yet. So it's not going to be, it's not going to show up on the bank statement. So for reconciliation purposes, we need to include these 3 checks as a reduction to the bank balance in order to reconcile the bank balance to the book balance and vice versa. So letter B is done. Now we go to letter C. Check number 3056 for July rent expense was correctly written and drawn for $1,270, but was erroneously entered in the accounting records as $1,250. Okay, so this tells us that the check of $1,270 that was drawn was correct. It was correctly drawn by the bank for that amount, but on the book side, it was incorrectly recorded for $1,250. So this means that we have to make an adjustment on the book side and not the bank, because the bank has it correct. The book doesn't. So the bank has it for $1,270. The bank has it for $1,270. The book has it for $1,250. So there's a difference of $20. We just need to know if it's going to be an increase on the book side or a decrease on the book side. So since this is a check that was written, and the check that was written was correctly written for $1,270, the book side of $1,250 needs to be increased by $20. And it's going to be, just to clarify, it's going to be an increase of a reduction of the cash balance. So I'm going to put over here and I'm going to say this is going to be, how can I say this? This is going to be an error. And this is for rent. Error, and this is going to be for rent, and this is for check number, check 3056. Is that what it says? Yes, check 3056. And it's going to be an additional reduction of $20. So the book side, they need to record an additional reduction of $20 to match what is correctly drawn on the bank side. So letter C is done. Letter D, the July bank statement shows the bank collected $79.55 cash on a note for Branch. Branch had not recorded this event before receiving this statement. Great. So it lets us know that the bank statement shows this amount of $79.55. The company has not recorded this amount yet. The reason why is because the bank statement is generated. The bank statement for the month of July is generated in the month of August. So on August 1st, that's when the bank statement of July is generated, because it's going to have all of the activity that occurred from July 1st to July 31st. Once the bank statement is generated, that's when the company can go back and see the notes that were collected and also the interest that was collected, and take those amounts that was collected and go ahead and record it in the books. But they won't know that information until the bank statement has been generated, which is going to generate in the new period. In this case, since this is July 31st that we're doing a bank rec for, or bank rec in, the bank statement is going to be generated in August. So this $79.55 is already shown on the bank balance. This needs to show up in the book balance, and this will be in addition. So this is going to be note collected, and this is going to be an addition of, what is it? $79.55. So plus $79.55. All right. Letter E, the bank statement shows an $805 NSF check. Great. So the bank statement already shows this. So it's already included in that $27,233. The check had been received from a customer, Evan Shaw. Branch has not yet recorded this check as NSF. Great. So this will be an NSF check, which means that this is going to be a reduction on the book balance side, because this check bounced. So the company tried to cash or deposit this check from Evan Shaw, who is the customer, and it bounced. So since it bounced, NSF fee occurred. So NSF check. Oops, there we go. NSF check It's going to be a reduction of $805 listed under the under the book side. Okay, letter F. The July statement shows a $25 bank service charge. It has not yet been recorded in miscellaneous expenses because no previous notification had been received. Great. So the bank statement shows $25 as a bank service charge. So it's already included in the bank balance, but it's not included in the book side. So it's $25. It's going to be, let's see, a bank fee, and it's going to be a reduction of $25. Okay, letter F is good. Letter G, branches July 31st daily cash receipts of $11,514 were placed in the bank's night depository on that date, but do not appear on the July 31st bank statement. Okay. So this cash receipts of $11,514 is already shown in the book balance. The reason why is because on July 31st, the company prepared the deposit on July 31st. Once they prepare the deposit, they're going to record it in their books as an addition to the cash account. But once it gets to the bank is not going to deposit or process those, process the cash receipts until the next month. So for reconciliation purposes, we're going to have to add this $11,514 to the bank side. So this will be a deposit in transit, which is going to be an addition of $11,514 on the bank side. So letter G is completed. So we're going to now do the math here. Real time. Let's do it. So I'm going to first start off with the bank side. So I'm going to take $27,233, add $11,514, subtract $1,482 outstanding checks, subtract $382, and then subtract $2,281. So that gives us $34,602, and this is our adjusted bank balance. Okay, so this means that the adjusted book balance should match our adjusted bank balance of $34,602. So now we go on the book side. So the book has $27,497 plus $79.55 minus 20 minus 805 minus 25. So that also gives us $34,602. So this is our adjusted book balance. Okay, this matches our adjusted bank balance. So again, notice here, we started off with a bank and book balance difference here of $27,233 and $27,497. And due to timing differences, you notice what's included on the bank side and what's included on the book side. So whatever's included on the book side was not included on the bank side, and vice versa. But ultimately, when performing a bank reconciliation, we have to make sure that this is reconciled properly and get to the correct balance on both sides. So ultimately, the book balance needs to match the bank balance. Now we go to number 2. Prepare the journal entries necessary to make the company's book balance of cash equal to the reconciled cash balance as of July 31st. Now, when it comes to processing these entries here or preparing the entries, we are not concerned with any items here that's shown on the bank side. The reason why is because these are items that are already recorded on the bank side, which already shows up on the bank statement, meaning that the deposit in transits of $11,514 is eventually going to be cleared in the bank. So it's going to eventually show up in the bank. The outstanding checks of 1482, 382, and 2281, that's eventually going to be, well, hopefully it's going to be cashed or cleared from the bank side. All right. Also, when it comes to the deposit in transits, these amounts here are already shown or reflected in the book balance. Same with these outstanding checks. It's already shown in the book balance. So we're not concerned with processing journal entries into the company's books from the items that are listed on the bank side. What we are concerned with is recording the entries in the company's books that are listed underneath the book balance side. Because once we record these entries here from the book side here, this is where the book balance will reflect right here. It will reflect, there we go, the bank side. Okay, so let's do this correctly. So I'm going to put together Branch's general journal here. Okay, and that's going to be, let's see, transaction. We'll put the date on here. And I'm going to put on here general journal. And I'm going to put on here debit and credit. Okay, so I would like to do this in the way that your assignments are, the way how you would need to do it in your assignments. So I'm actually going to go through letters A through G individually and let you know either we need to process an entry, like recorded entry, or not. So for letter A, on July 31st, the company's cash account has a $27,497 debit balance, but its July bank statement shows a $27,233 balance. Okay, so for letter A, I'm going to put on here, letter A, and no entry is required. We don't need to do anything for letter A. Right? Letter B, check number 3031 for 1482, check number 3065 for 382, and check number 3069 for 2281 are outstanding checks. So since our outstanding checks are already recorded in this balance here, in the book balance, we also don't have to do anything for letter B. So I'll put on here the same as no entry required. Letter C, check number 3056 for July rent expense was correctly written and drawn for $12.70, but was erroneously entered in the accounting records as $12.50. Okay, go back to the reconciliation here, and this is what they are referring to, this reduction of $20 here. So this is something that we're going to need to do for letter C. So for letter C, I'm going to put on here July 31st, so 7/31. And since letter C, this is for rent expense, the account that we're going to debit is going to be rent expense. So rent expense is going to be debited for $20, and the credit is going to go to cash for that same amount. So there's more cash that needs to be that needs to go out, because the bank has it correct, $12.70, but the book balance is not correct, and that's $12.50. So we need to record an additional reduction of $20 in cash. So just so you know, when it comes to each entry here that needs to be made, it's going to affect the cash account. Why? Because all of these items here underneath the book balance is affecting cash. Just so you know. Okay. Letter D. Letter D, the July bank statement shows the bank collected $79.55 cash on a note for Branch. Branch had not recorded this event before this statement. So this is what they're referring to, this notes collected here of $79.55. We need to go ahead and record that as an addition to cash. So letter D, okay, the debit is going to go to cash. Okay, because this is going to be an increase in cash of $7,955, and the account that's going to be credited is going to be notes receivable, or in your assignments, I believe it's called notes collected. It's the same account. Okay, notes receivable, notes collected. It is an asset account, and we're going to credit that account for $79.55. So that's an increase in cash, decrease in notes receivable. Letter E. Let's see, letter E. The bank statement shows an 805 NSF check. Okay, so the bank has it. The check had been received from a customer, Evan Shaw. Branch has not yet recorded this check as NSF. Great. Well, not great for the NSF check. So on 7/31, this is, oh, there we go. This is what it's referring to, this $805 reduction. So we know cash is going to be reduced by $805. Okay, the debit is going to go to accounts receivable. Okay, specifically the customer name, Evan Shaw, for $805. Okay, so the reason why the business or the company is debiting accounts receivable is because, well, initially the company tried to cash or deposit a check of $805, but it bounced. And this is from the customer. So since it bounced, cash is going to be credited for $805 because that's the fee that was charged from the bank, which means that the company needs to now go after Evan Shaw again and say, hey, this check was bounced. You're going to have to pay us $805 because I'm pretty sure the fee, the NSF fee, is tacked on to this amount as well. So you need to pay us. So this is going to be an IOU from the customer, which is why the debit is going towards accounts receivable, specifically directed to the customer, Evan Shaw. So the company needs to go after Evan Shaw for that money. Hopefully that makes sense. Letter F. Letter F, the July bank statement shows a $25 bank service charge. It has not yet been recorded in miscellaneous expenses because no previous notification had been received. Okay, so the bank already shows that bank service fee of $25. Company doesn't have it yet, but it lets us know that it hasn't been recorded in miscellaneous expenses, which is where it actually needs to go to. That's where it actually needs to go, that account, miscellaneous expense. So 7/31, the debit is going to go to, I'm just going to abbreviate this so I won't misspell it, miscellaneous expense, MISC expense, for, was it $25? Let's see. Yes, because there it is, bank fee, $25, and it should go to miscellaneous fee or expense. The credit is going to go to cash of $25 because this is a reduction of cash. All right. Last thing, branches July 31st. So letter G, branches July 31st daily cash receipt of $11,514 were placed in the bank's night depository on that date, but do not appear in a July 31st bank statement. Okay, so this amount here is already included in the book side here. It's already included in the book balance, but it's not included on the bank side. That's fine. We're not concerned with it, so we're not going to make a double entry on the books. So letter G is going to be no entry required. Okay, so let me zoom out so you can see everything. So there's the bank reconciliation on the left side. On the right side, here are all the entries that are made from letters A through G. And notice, all of the entries that are made is coming from the book side.